sector and targets you want to lend to, which products is relevant. We're dealing in companies who are the potential business customers, and then for individuals who are the potential consumer loans. So in a way, this is the marketing phase based on internal lending policies and central bank's periodic announcements and guidelines. And then this is where you identify the target market's risk asset acceptance criteria, the RAC. That's based on these four things: potential repayment ability, income, cash flow sources, collateral availability, and any recent history of poor credit record. And here in step 2, now you're doing the actual credit analysis stage. Okay, that's when you review and analyze all the information and you create an opinion whether they can repay the loan. If the risk is high, you can reject it or modify to mitigate the risk and default. And you need to be satisfied the applicant has sufficient potential cash flow for future loan payment. Another part what they say is also we need to structure the loan. We need to structure the loan to meet the borrower's needs and comply with banks' lending guidelines. And after approval, you issue the letter offer, and the letter offer by design is to see whether they accept it or not. Then you prepare the loan agreement and the security agreement. And this is where I taught you guys yesterday, ESR. What does ESR stand for? Excuse me? What does ESR stand for? We learned yesterday.
Execution stamping registration.
Very good. Okay, so I'm going to repeat this a lot, especially in the afternoon. So you need to remember these concepts. And after ESR is done, disperse the loan. Sorry? No? Okay. And the applicant is now legal borrower. Okay? All right, next. In terms of why we have separation of roles between different departments, there are 3 reasons. 1, you need to maintain adequate checks and balance. 2, you want to minimize fraud, and you want to minimize conflicts of, and third reason, minimize conflict of interest. I assume you guys are taking notes, okay? Anyways, now here the legal documents must be completed and maintained securely by the lender for future reference. Okay, so you have the legal department for the FI and the professional lawyers, which I'll talk about later, what's their role. And remember, steps 1, 2, 3 is before drawdown. Step 4 and 5 is after drawdown. Okay, now step 4 and 5, the loan monitoring department. This is where you review all this information here after loan approval until the end of the tenor, and you identify potential issues in terms of credit weakness and any risk of default. Step number 5 is the final phase. This is collection. Either they paid on time and all repayment obligations are met within the specified time period, and the necessary action by bank to recover outstanding balance due to loan settlement problems. Now, you might be wondering why there is a recovery agency. I think this one something more soon be more familiar in business lending. Okay, in business lending is it's not you would do it internally, but in what's it called? In retail lending like credit cards and housing loan, you may appoint a third-party company. They'll come in there and do the collection for you. Okay, they'll come in there and do the collection for you. Okay, they'll do the collection and call for you, and then they earn the commission accordingly. Okay. So that's the end of credit process cycle. Any questions so far, or are you okay to move on? Just give me an indication on the chat. Okay, okay, then we move on. Next one will be the other mandatory topic that will come up in exam is the principle of risk-taking in banking credit. And the bank should adopt a strong credit culture that is an acceptable set of values within the organization to guide its officers in making sound credit judgment and protect the bank from poor quality of loan assets. The lender's risk-taking must be in line with financial resources, which is capital adequacy and competency to prevent financial distress and non-performing loan. And the lender must be mindful of what they call risk-return concept. Okay, so what they're saying here is that they provide financing at a fixed return. We're not taking excessive equity risks. Like business owners, which have the potential for unlimited return. Next one here will be prioritizing quality of credit is quality first policies, and credit officers should give priority to quality of loans. I heard from one of your RHB colleagues on the retail side many years ago. They launched a retail loan product that was what's it called? No need documentation. Just fill out the application form and then no need to submit documents. Needless to say, the MPL went up like crazy. Then Bank Negara put the foot down and said no more. It was like they put this was like 12, 13 years ago when they did this. This one here, let's see. Eva, I'll ask this question to you. You see the picture on the left side. What does this picture symbolize? What does it mean when you see this picture on the left?
The people, the people put all the egg inside the basket.
Have you heard the expression, Eva, never put all your eggs in one basket before, Eva?
Yes.
What does that mean? Yeah.
So he diversified the risk. He put inside,
yeah.
He put inside different basket.
Correct. He put it all in different baskets. Correct. Okay. And the lender should avoid over concentration on their loans to the borrowers, industry, or market segment. Okay. And this is where they talk about good risk management practice. They must diversify the risk exposure, whether it's borrowers, industry, market segments. And Eva, one more question, yeah. We learned yesterday, I mentioned the Moltakan topic. For borrower, how does Bank Negara monitor concentration risk for borrowers? We learned this yesterday.
Single party risk
On the mic.
exposure.
If you don't know, you better let me know.
I think I don't know. Is this the morning session?
Oh yeah.
Because morning session,
Fair enough. You were.
I aware.
That's fair. Okay. So Eva,
Okay, thank you.
Yeah, you're right. I didn't mention this when you were out for the meeting. So, take note. Yesterday we mentioned SECL. So class, do you want to help Eva? When we measure SECL, is how many percent of total capital?
25%.
25.
25% of total capital. So, yeah. So Eva, you better write this down. For the rest of you that didn't, that had to go for meeting, write this down. Of total capital, yeah. And then large exposure
10%.
is 10% and above of total capital. So this is the one that the four of you that missed out can write this down. Now, next one here is principle of proportionate stake. From the borrower's point of view, we want to see if they have invested sufficient capital. And the key term is, are you financially committed towards debt obligation? So for retail lending, we look at LTV for retail. Okay. For business, we look at debt to equity. The higher the ratio, the higher the risks. Now here we have pi pasu. Akmal, I'm gonna bore you for a minute. Are you ready, Akmal?
Yes.
Awesome. So I'm gonna bore you for a minute here, and I'll explain it in more detail.
Function.
Hold on, I'm opening the board now. Okay, Amal, can you see the board?
Can.
Awesome. So when you see the word pi pasu, can you read out the first sentence? What does it say on the slide number 2016? Can you read it out loud for me?
This line.
Slide 16, pi pasu, the first sentence.
Lender is to ensure that the bank security arrangement condition and risk exposure with borrower is on equal footing.
That's right.
Pari-patu other lenders.
Security position and risk exposure. This is the key word, yeah. With borrower is on equal footing. Okay?
Okay.
This is to, and this is another important sentence. To avoid, what does it say? To avoid being what?
Being inferior in right of claim relative to other lenders upon liquidation of borrower assets.
Upon asset liquidation. Good. Now, let me put up the scenario for you, Amal, so that is clearer, yeah?
Okay.
Imagine here we have borrower. And say we have here RHB. And say in RHB case is 2 million 90-day trade finance. And let's say security is clean, yeah? Have you heard of that term before? Amma was clean?
Clean no security.
Yeah, no security, yeah? It's basically unsecured.
Yeah.
Okay, good. Now, let's say there's another bank. Let's call this Bank B. 1 million 90-day trade. And say the security is FD 300,000. Your fixed deposit, 300,000. Alma, have you heard of the term security coverage before?
Security coverage.
Yeah. Have you heard of that term before?
Yeah.
Okay, what is the formula for security coverage?
Security value divided amount
Mm-hmm.
loan.
Yeah, so the collateral value, yeah? Collateral value divided by the loan amount, right?
Yes.
Okay. So we learned that in the before. Good. So bank B security coverage is how much?
30%.
30%, correct. And RHB is 0 lah. Yeah.
Yeah.
First question is, and by the way, Insun, this might be new for you, yeah, because it's more common in business lending than it is in retail lending. But in business lending, this is very particular. Okay. First question, Amal, is RHB pi pasu with bank B? That's my question for you, Amal.
No.
Correct. And why is that the case? Why is your answer no?
Because this the security unsecured
Mm-hmm.
loan.
Mm-hmm.
No security.
Yeah. So if that was the case, and by the way, Insun, this is why, like, if in business lending, if you submit a case like this where you're unsecured and the other bank is fully secured or more secured, and it's the same type of facility, your loan will be rejected. So how much FD should RHB negotiate for to be pi pasu?
%, like lending.
So it's 30% of 2 million, right? So how much would the FD amount be?
100K.
How much?
600K.
600, correct. Now, a little bit different scenario, Amal. You're doing well. Good job. Let's say we have another scenario. We have Bank C, 2 million, 15-year term loan. Security is 2.5 million factory. My question for you, Amal, is can RHB and Bank B argue it should be pari passu with Bank C?
Cannot.
Correct. And why not?
Security factory charge with penalty.
Okay. I'll put it to you another way. In general, Amal, which is higher risk? Short-term debt or long-term debt?
Long-term debt. Yeah.
Right. So Bank C is taking higher risk, correct?
Yes.
And that is why, yeah. The answer is no, because Bank C is taking higher risk due to much longer tenor. It is mitigating higher risk with higher security coverage. Okay? Well done, Amal. Everyone give Amal a round of applause. Well done. I need, Amal, your help to take a picture of this and post in WhatsApp group, because this one will be an exam topic to understand this concept.
Okay, sure, can.
Thanks, Amal. Okay, one last minute. I just saw your message, yeah? Okay, thanks for letting me know. Any questions so far? If you're okay, let me know. Insoon, I'm just checking on you because this is new for you, yeah? Are you okay so far on this? The rest of you are business lenders. Okay, good. Just waiting for Amal to post the picture on WhatsApp. Once he posts, I can move on. Great, thanks. Okay, so one last minute. If you just come back, we are on slide number 16. We're gonna move to slide 17, yeah? I shared the diagram on the WhatsApp group, one last minute, so you can have a look later, yeah?
Okay. Thank you.
Thank you. So here is unsecured lending. You must have a strong first way out. Some words that you need to know for exam. First way out is just to be clear, first way out is borrower operating cash flow for business. Okay. Second way out is the security. They also mentioned if you're doing unsecured lending, you must have unencumbered assets. Encumbered means assets, an asset that is pledged to a bank as security. Example, charge. Unencumbered means it is free from encumbrances. i.e. not charged, e.g. not charged to a bank. Okay, so CJ, I need a favor, CJ. Can you help take a picture of what I wrote in the chat and post in the WhatsApp group, please? Some words that you need to know. You need to know what's first way out. You need to know what's second way out. You need to know encumbered and unencumbered. Okay, thanks, CJ. If it's secured by collateral, we'll talk about the quality of collateral later. We'll talk about that more in the afternoon. Now, what do I mean by principle of control? I'll put it to you this way. When you're in the driver's seat, you have control of the wheel. If you're on the passenger seat, you have no control where you're going. So that's why they put the term driver's seat. The driver's seat means you have control. You have control over what is the purpose and the usage of facility for the intended purpose. And you have control over the source of repayment, such as business cash flow. So to ensure effective control, these are the measures you undertake. Proper structure of the quantum and tenor covenants, we'll talk about later, and effective loan monitoring system examples. On slide 19, this is where they mention appropriate financing tenor. The tenor of financing matches the borrower's need based on the purpose of the loan. And they mention two examples of mismatch. Okay, two examples of mismatch. Example number one is long-term loan for short-term requirements. It is abuse of facility. Short-term loan for long-term requirements. Increased prospect of loan default. Appropriate structure should be in line with the economic lifespan of the assets. What is economic lifespan? Economic lifespan means the useful life of the assets, e.g. laptops, 3 to 5 years. Okay. I need a favor, Kent. Can you take a picture of what I wrote and post it on the WhatsApp group, please? Is it okay, Kent? Some new terms to learn. Okay. Last one here is productive and purposeful lending. So from business lending's perspective, it's a specific purpose that's consistent with nature of business. You're financing cash flow generating productive assets. So if you're financing plant production related machinery equipment, that will in turn generate cash flow to pay out your loan. For retail lending, the borrower has to be economically productive. By definition, they have the ability to generate recurring and reliable income to meet loan repayment. Okay. Oh. So not sure if Ken, are you still there? Just needed for you to post the last thing on the chat. The last 2-3 things I wrote down. Ken, are you there? If not, I'll ask Tio, can you help instead? Is it okay, Tio? When I wrote down the when I wrote down the term of the mismatch of tenor, examples, and economic lifespan definition. Okay. Okay. The rest of this chapter, honestly, you can read on your own. It's not complicated. This is just where you get information. This one is the scope of credit assessment in terms of the business. This one here is the environment. You do the site visit, and And then this is where I mentioned earlier, first way out, get the business plan and forecast. What's the present commitment? What's the future commitment after drawdown? And then the collateral. That's it. That one you can read through on your own, but I wanted to focus more on principles of lending and credit process cycle. That's the more priority topic. Okay, let's do a recap now. Okay, everyone screens on, please. Oh, by the way, Insun, does it reflect your full name as per IC? Just want to double check.
No, sorry, I put my surname now.
Yeah, because otherwise they cannot pick up your attendance for the when the RHB is checking. It will be, yeah. That's it. Thanks. Okay. First question is credit process cycle starts with credit analysis, true or false?
False.
False.
Good. Okay. It starts with what?
Define a written report.
You can write down in exam. Exam question is name the sequence 1 to 5. That was what they did in the past. So you have to memorize the sequence 1 to 5. That was what they test in exam. In defining a written report, they mentioned RAAC, RAC. What does RAC stand for?
Risk acceptance criteria.
Very good. Does that mean if I got through risk asset acceptance criteria, the loan is automatically approved? Is that true?
No.
No. This is like to see if it's an eligible customer, for example. Okay. What are the 4 factors of RAC? The 4 factors they look at?
Potential repayment ability,
Yep.
Income cash flow sources.
Okay. Good.
availability, any recent history of poor credit record.
Very good. Okay. Okay. So next, why do we structure the loan facility? Give me 2 reasons under credit analysis. Why do we structure loan facility?
Meet the borrower's needs.
Meet the borrower's needs.
Comply with the bank lending's guideline.
Right. Comply with bank's lending guidelines, for example. Good. And when we look at documentation stage, what are the 3 reasons why you want to have separation of duties? This one in your printout is on the bottom left. It's not on the top right. It's on your bottom left. It's like a small print in your copy.
Adequate check and balances.
Yep. And 2 more reasons.
Minimize the risk.
Minimize,
Conflict.
minimize conflict of interest and
Potential for fraud.
potential for fraud. Okay. Good. Monitoring straightforward and recovery straightforward. Good. I want you guys to name me principles of lending one by one. Start from slide 12. Tell me the principle of lending and tell me what is it about. On slide 12, what's the first principle of lending? Because there's 9 altogether. You need to know all this for exam. This is really textbook mentality. Yeah.
Strong credit culture.
You must have a strong credit culture. Very good. The risk taking must be in line with what?
Financial resources and competency.
Competency.
We learn capital adequacy. Why must we have capital adequacy? Because capital is to absorb what?
Losses.
Losses.
Okay? So is the risk you take, you must have enough capital to absorb the losses potential from the risk. Okay? And you also need to have competency to prevent NPLs. Okay? And there's mentioned risk return concept. Because as a lender, we do not have the potential for unlimited return. Our rate of return is fixed. So we don't take excessive business risk. We don't take excessive equity risk. What is the second principles of lending? Slide 13.
Prioritize the quality of credit.
Yeah, good. Prioritize the quality of credit. Good. Next one, slide 14. Never put all your eggs in one basket.
Well spread lending portfolio.
Well spread lending portfolio to avoid what risk?
Over
Concentration risk.
Concentration risk. How does Bank Negara measure borrower concentration risk?
SCL.
SC,
SECL.
ECL less than or equal 25%, and single will be 10%.
Large exposure, it means. Large exposure.
Yeah, that's exposure.
Large exposure. 10% and above. 10% and above. Okay. Next principle. What is principle of proportionate stake? Slide 15.
Proportionate stake.
LTV.
Already.
LTV, yes.
And yes. Business lending.
Is LTV for business or retail?
Retail.
Yeah.
Okay. For business, how do we measure?
Debt to equity
Debt.
ratio.
Shareholders' equity.
The lower the ratio, the lower the risk. True or false?
Yes.
True.
Yes.
True. Good. Yeah. So you want to see, are they financially committed? This is the keyword. Are they financially committed towards debt obligation? What is pari passu?
Equal footing. Equal footing.
Equal footing on what?
Lender
Guarantee.
position.
Bank security
Security
Position and
and
business
risk
and
exposure
risk exposure.
with other lenders.
Yeah, relative to other lenders. Yeah. Why do we check pari passu? To avoid what?
Inferior position.
Yeah, being inferior in
Right. Claim.
Rights of
rights
claim.
of claim relative to other lenders.
Other lenders.
Okay. Do you guys know what is liquidation? Who can describe liquidation of assets?
And transfer into cash.
Yes, when for example Insoon, when a company closes down and becomes insolvent, they have to sell everything. What's the name Insoon of that airline company that closed? A lot of people lost money because they bought the tickets up front. Was it My Airline?
Yes.
Yeah,
Yeah.
My Airline, right?
Very short term, yeah.
So you got all these creditors like owe money. So My Airline has to sell their planes, sell their hangars, everything, and have to pay the creditors. So the last thing you want is you want to be inferior in your creditor's claim. Yeah. Because in unsecured lending, you must have what and what in principal protection.
Good first way out.
Good first way out. Cash
way out
flow
and-
generated from business.
Yeah. Cash flow generated from business. Yeah. Second way out is the collateral. Okay. So second way out is
Security.
collateral. But obviously, you're doing unsecured lending. You deal with a company that has a strong first way out. Other than that, your assets, when you analyze the business, the assets of the business should be what?
Asset of the business.
Encumbered or unencumbered?
Unencumbered.
Unencumbered.
What's the difference between the two?
Unencumbered is
Charged or not charged to the bank.
It's not
Not
just
charged to other bank.
So unencumbered means it's not charged to the bank. Yeah, is free from encumbrance. So when we talk about liquidation, right? If it's already belonged to somebody else, you have no claim on it. But if you're doing unsecured lending, but if it's unencumbered, you have a chance of recovery, a better chance. Okay. In principle of control, do you want to be on the passenger seat or the driver's seat?
Driver's seat.
Privacy.
Why driver's seat? Because you want to have
Control.
Control.
over the wheel. Yeah, if you're on the passenger seat, you have no control. Okay. So what do you want to control as a lender?
Usage of facility, source of repayment.
Yes, the usage of facility for its purpose and the source of repayment. Very good. Okay. What's the next principle on slide 19?
Mismatch in tenor.
Appropriate financing tenure.
Appropriate.
Yeah. Give me 2 examples of mismatch in tenor.
Abuse of facility.
Long term.
How do we get abuse of facility?
Long-term
Long-term
loan.
loan for short-term use.
Long-term loan for short-term requirement. Very good. And
Short-term
Short-term loan for long-term requirement.
Long-term requirement.
short-term loan for long-term needs, then that will increase the prospect of loan
Loan
default.
default.
How about let's do a 10-year loan for financing laptops. Is that a good idea?
No.
No.
Good. Why?
Economic lifespan is
Yeah, the economic lifespan of laptop is only 3 to 5 years. That's why in higher purchase world, the maximum tenor is what? 9 years? Yeah. You cannot do a housing loan tenor with car loan with for car loan. That is crazy. Okay? No car ever lasts 35 years. Okay. Next. We talk about purposeful and productive lending. How about this? I lend a business 5 million term loan so they can use the 5 million money to give shareholder dividends. Is that productive lending in business?
No.
No.
Correct. So that was a question that came up in the exam. So write that down. Example, using term loan to give shareholder dividends is not productive lending. So what is in business productive lending?
Operation.
Specific purpose as
Purpose?
necessary in nature of business.
Yep, that's right, Om. And
cash flow generating.
Cash flow generating.
what type of asset? That's a
And
P.
production.
Productive asset.
Productive asset. When I have property, plant, and equipment, I make stock, I will sell the stock, I will generate profits and cash flow. That's what I mean. It's a productive asset that is generating cash flow. How about an empty land not doing anything? Just the land, no nothing.
No.
Is that productive? No.
No.
Okay. So think about it as productive asset. Yeah. You're financing cash, productive asset that's generating cash flow. What about retail? Is retail lending the same definition or different?
Different.
What do they call a borrower? Borrower must be what?
Economical
Economically
productive.
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 Very good. Economically productive. Example. I am, for those of you who watch those old Hong Kong movies from the 80s, say I'm Andy Lau. I'm a famous Hong Kong poker player. I go to Genting, I go to Macau, and I win millions and millions of dollars playing poker. I make lots of millions of money. Am I economically productive as Andy Lau, the poker player?
No.
No. Why? You're correct. Why?
He's making loss.
Your income is not confirmed, recurring, and
Not
reliable.
recurring one.
Yeah. I mean, I'm Andy Lau. I can make money lah, okay? But I could lose money and I could, okay. I'm not generating recurring and reliable.
Reliable income.
That's why, as bankers, when we apply for retail loan, they look at our occupation, they approve because they know we have recurring and reliable
Reliable.
income. Banker, government civil servants, it's like no problem. Singers, very tough. Actors, very tough. Yeah, I have some friends that were in acting and business. I had a friend in DJ. When the pandemic hit, he had no income for like 9 months. It was so bad he had to go sell. He had to go make a matcha tea to survive. And he was making like he was like a famous DJ. He was making like 6 figures easily. He was very famous, but no choice. He had to go make matcha tea to survive. Okay, next. Let's go straight into it. So what I covered just now is the CCR chapter 4 in the textbook. We now go straight to the 5 C's. This is chapter 5 in the book. Right. Next is the credit risk assessment framework. So here, this is what they test in the exam. Okay. If they give you this, is a freaking charity question. They'll say for example, which letter show is a good ability but poor payment habits. They will ask something like this. Yeah. If you look at this slide, and they'll say if they throw this question, you should be able to answer this. If you get this wrong, I really cannot help you. Okay. So this one's like charity. Okay. If they give you this, insun. Wait, how come you say B?
Donkey.
How come got donkey?
Huh?
I said good ability.
Okay. Mr.
Alamak, patah hati. Oh my god, that was like,
See.
ayo, patah hati. I said this was like the easiest question. Everyone got like D and D, A, ayo, patah hati. Okay, alamak. Huh? Okay. What Asmida say? A, Asmida, patah hati. Sila, Asmida, I'm asking, which one is good ability but poor payment habit? Ayo, when the one you chose, good habit is A. Alamak. The one I'm asking is poor payment habits. Ayo, patah hati. See, oh my goodness. I thought this was gonna be like the easiest question. Now I know why people struggle in exam. My God, this one see, good ability here, bad habit here. My goodness, need to know how to read the diagram, Oh my goodness, scary. Okay, read the question carefully next time, My goodness, charity question. Give up. These are the 5 C's that we'll cover. Now, in terms of character, they have traditional values and other positive attributes. And they mention for retail's perspective, we look at integrity, a sense of responsibility, and behavior. For consumer lending, assessment is a highly personal process. We look at the age because they said statistically, middle-aged and elderly borrowers, they tend to be more stable and they are less likely to default. Because someone that's very young, they may be more aggressive and say, you know what, if I bankrupt now, I can recover and bounce back later. Also check marital status because family commitment reduces the tendency to default. We also check the occupation. Next one here is business lending. We check 3 things. We check, do they have corporate governance? I taught you guys corporate governance yesterday. Expertise and continuous learning and development of skills. That's essential to stay competitive. And the vision that allows company to anticipate trends and changes in the marketplace. We recognize new trends early, okay, and our strategic concepts ahead of time to play a important role in maintaining market relevance and customer support. They also mentioned the other character attributes, for example, their style of management. Are they conservative or are they the speculative type or aggressive type? Lifestyle means, do they show off a lot? Are they extravagant or are they thrifty? Yeah. I use this example here. This WeWork example is an example of extravagant. Long story short, I think there was like the TV show they made on Netflix where the WeWork is a co-sharing company. They had like I think they were losing money, firing employees, couldn't get IPO. Meanwhile, this founder spent 60 million on the plane for no reason. He just wanted to save for business purposes, but he's just wasting company money. Then they kick him out eventually. So these are the other attributes that you want to check. Now, from the capacity purpose, do they have sufficient future and potential cash flow generation? This is the individual borrower information you need to get. On slide number 38, this is the business borrower information that you like to check to assess their capacity to generate cash flow. Conditions refers to external environment. So they talk about 3 cycles: economic cycle, industry life cycle, and product life cycle. Economic cycle, they talk about 4 phases. First phase is the recovery. Things are getting better. Consumers are cautiously increasing spending and businesses begin to open. Phase B is what they call the boom condition. Consumers are bullish. They're unrestrained in spending. Business is brisk, but competition is mounting. And excess demand is building rapidly. And signals from central bank, they're slowly rising interest rates and warnings of new lending policies. Phase C, boom time has evaporated, some amount of panic, and in severe cases, panic selling of assets, stocks, and properties. And unemployment is rising, businesses are filing for bankruptcy. And D, there's all economic participants take stock of downturn, start recuperating. Society and business begin to do housekeeping, weak competitors liquidate and close down. I want you guys to write down for slide number 41 these 4 letters: N, G, M, D. Sunrise Industries is new startup. Their initiatives are announced and encouraged. Take high risks. Growth stage is industries clearly viable, showing signs of growth and strong profits. Early participants likely reward a large payoff. M is overcrowded, large number of competitors, profit margin drop. Trade terms becomes highly competitive. And last one here is D, is the sunset industry. Competitors start to leave industry, shrinking profits, stagnating, declining sales. Cash flow start to decrease. Equipment often falls into disrepair, and high-cost companies expect to post losses. And in product life cycle, you write down 3 S's. It's new, no established market yet, exploring potential markets, responses to product often slow initially. And here for Sunshine, proven track record, strong markets, demand established. They're adjusting for market leadership even as sales continue to grow. Possibility of declining profit margins due to more competitors. And here for Sunset, the product is challenged by new design or alternate products. They shift to new products or opt to something else. And business likely to see falling profit, even losses, unless there's new product replacement. Okay. Okay, that's right. And then here, some products are what we call evergreen. Evergreen means perpetual. Perpetual means forever. Okay, there's always perpetual. Okay, so if I say the word evergreen or perpetual means forever, it's only affected by economic cycle. So on capital side, here's the key point. The lenders is only taking credit risk, not the business risk. The business risk is the responsibility of the borrower, is provided sufficient capital to underwrite the risk. Okay. Now, for the lenders, they'll need to assess the sufficiency of shareholders' financial commitment relative to the permanent assets owned by the business. Okay, so let me ask. Let's see. Paley, are you available? Paley, are you there? Are you available with the microphone on?
Yes.
Awesome. Okay, great. I'm gonna demonstrate how this works on with the whiteboard. So just bear with me for a minute, yeah. Okay. So I'm gonna interact with you for this one to explain in more detail. Okay. So we just to recap, this is under 5C's. Capital. Lenders take credit risk. Do lenders take business risk? No. By capital. Now, here, let me put some diagrams here. So this is the asset. Okay, so Paley, what I'm going to demonstrate first is what are the three examples of shareholders' financial commitment. Yeah. First one is shareholder funds. Option 1, shareholder funds. Okay, so that's straightforward. That's into paid out capital. Now, there's a term that they used here, Paley, called shareholder loan. Okay? Now, technically, Paley, it's a shareholder loan and equity or liability.
Shareholder loan is a liability.
Correct. Okay, but it behaves like equity, and I'll explain why. Yeah, because I'll show you why. Now, the difference between shareholder loan and equity is that the paid up capital is a permanent commitment. Once you're there, you can't take it out. It's a permanent commitment. But a shareholder loan is with the expectation you will have the repayment. Yeah, you have the repayment. Okay. Now, here, this is what we do. Paley, who should be paid back first? RHB Bank or shareholder loan? If the RHB was in the debt position.
RHB?
Correct. So what we do is we have what they call a subordination agreement. Between the two here. So here, this one becomes a senior position. And this one here will be subordinated position. So what happens is here in the subordination agreement, the debt must be repaid first. Debt repaid before bank debt repaid. Before shareholder loan. Okay. So you have this arrangement called the subordination agreement here. So this is example number 2. Option 2 will be here. This one, option 2, we call it shareholder subordinated loan. There we go. And option 3 is the shareholder personal assets, e.g. FD, property, and we use it as option 3, third-party collateral. That's your option 3. Okay, so this is what you need to know for exam, Paley, in terms of understanding the 3 examples of shareholders' financial commitment. Yeah. Bailey, can you take a picture of this and post in the WhatsApp group, please?
Okay.
Awesome. Awesome. Just let me know if you guys have any questions on this. If you have no questions, then just indicate to me on the chat. Because normally from experience, when I teach this, a lot of people struggle with this concept. Yeah. So, but if you're okay, then just let me know. Because most of you guys are experienced business lenders. I think it should be okay. I normally struggle with this with the people from operations or retail collection people. No questions there, Justin? Straightforward for you. I think it should be okay. Okay, BJ, okay, yeah? Cool. All right. Thanks, Paley. Okay, so next is for consumer capital. For consumer lending, applicant must disclose availability of backup capacity to repay the bank. If oh wait, I haven't popped up the slide yet. My apologies. From the consumer's point of view, you want to measure their net worth. The way you measure the net worth is the applicant's assets and liability side. Generally, with little capital contribution, they are more likely to walk away. So then without the sense of commitment, you only depend on collateral, which is never fully effective. And final slide before we take our break is collateral. Collateral refers to both security and guarantee, and we call it the second way out. And then these are the things you will assess in terms of collateral. Okay, well done. We now take our first break of the day. I'll put a 10-minute break clock. And that's it. Yeah, so we'll do the recap after the break. I want to cover a few more topics, then we'll do the break, because 5 C's is straightforward. Important tip for exam, yeah. Sometimes there's 5 MCQs on, just to let you know, there's 5 MCQs on 5 C's. 3 MCQs on Campari, yeah. That is 10% of total grade. It's straightforward, but you need to score high percentage here. Ideally 100%, so that you give yourself a better odds of mitigating the more difficult chapters. Okay, good. I'll set the clock up and I'll see you guys in 10 minutes.
Hello，早上好，方便讲话吗？压力也这样子。OK， 我给你知道 ，OK， 这个 sales finance 的 status 我现在有了，它是 approve， 但是 condition 和一些 terms 有一些 vary 啦。approve 的 limit 上次我们是 apply for 12 嘛，它 approve 8 usage for sales，OK，time to time 我们去 review 啦，OK， 但是这个 part 它会有一个，它会等下会要出一个 SRO， 会有一个 additional 的 condition 啦，就是你要 finance 的这一批 sales invoice 它的 proceed 是要进 RHB bank 的，就是把现在有进 RHB bank 的那一些 invoice 来做 financing， 你讲，OK。可以，你现在叫他进 RHB， 因为 OK， 我给你知道这个是 credit put up 的 condition 我念给你听一下。For each sales invoice financed by RHB, the sales proceed is to be remitted to the current account maintained with RHB. Customer to provide invoice with evidence that payment from buyers is to be remitted to RHB current account. So 我这一点我自己是这样来拆解这个东西的啦 ，OK， 2点，一点是如果你是 finance 还没有收到钱的话 ，OK， 这样你的 invoice 那边可能你底下你放一行字就是那个 proceed 进 RHB 的哪一个户口号码，然后你就是加一行这样的字，然后过后可能我不懂 actual 的 operation， 我要去问那个阿彪那边的 team， 他会不会过后还要再跟你讨他 payment 的时候的 receipt， 因为这 payment 的时候其实我们自己看得到嘛，我是觉得应该。Operation is 应该是不需要啦，但是你可能要加那一行字，就是叫 customer 就是在 invoice 上面加一行字，就是 proceed to be 进哪一个户口，就是这样写下去这样子。我相信他们会要这个啦。OK。我好像有听他讲过有 AMLA issue 是吗？那时候是这样。OK， 你可以再给我，你给我多一次他 company 名字，不过我应该可能要到拜五我才可以 get back 给你，因为我这2天都在，这个我要等他SRO出现，所以要一点时间，应该下个礼拜我觉得，early 下个礼拜这样啦。可以，好，OK， 可以。对，然后 actual 的也是要进 RHB 了，他们应该会要 two-way monitoring 啦，就是这样子。So， 其他 as usual， 只是 limit 是 cap 在8啦，对，60天，应该下个礼拜，因为我在 training 一点是这个其实它只是hard copy memo 签了，不是 hard copy memo 我先看到了，可是 system 还没有 approve，我要等 system approve 了，我才可以去 request SRO，所以这个是physical 的那一个 memo，要 approve 的所有人已经 sign 完了，可以 ，OK， 可以，看我再 update 你 ，OK， 好 ，thank you 拜拜。 so sorry for Kacau Perry here. Would like to seek for help. That I got one case why I in the midst of ask them to do the disbursement. So I got the return stated that which I need to comply T&C in LO. Okay, so meaning which part is I miss out in here? Is it I go to there is a one tab called post CP or convenient and fee? Is it that one I need to select the condition all under yes? Okay, first is SI I already submitted, so SI comply no? But that one I unable to click. Yeah, post CP, yes. BCO. Oh. Which okay, I go to home. Covenant and fees pending. Under the post approval task. There is only pending reward post approval. What is the tab of post approval? No, hold on. You go to home first. Okay, I go to your home. Customer, go to home, right? Mm-hmm. Then you got the call report task, you got credit origin task, okay, you got post approval task. Yeah. I got letter offer, covenant and fees pending. Yeah. Okay, you click in. So I click in the covenant and fees pending. Then you search your customer name. I have to. See that those monitored by ARM, you need to update on whether comply ke tidak. Just a second. I search my customer name, but it not appear. It's not appear under here. Not appear under there. Yeah. You sure? Because it will be under there already. Okay. I go to covenants and fees dash pending, right? Okay. Then you have pending verification, pending rework, and to be due. Got 4 tabs there. But by default, they will go to pending one. Yeah, by default they go to pending. I go pending and search. They don't have this what customer LLY that I want to do. So I go and tab the column search also, there is no record coming out. NLI query. It's under your CA 2501, is it? Just a second. I cannot go into your post CP. CA 2501, yes, correct. I cannot go into your post CP search lines. See my keys. Kasih 8 Natasha, full access. Full access, so I cannot see, also cannot see. I don't know what is the thing that I didn't do. Because it said I need to comply of the just a second, I go in under the application trial there is remark BU to comply T&C in LO. In your LO he didn't say in your CRES so meaning what
Okay, welcome back everyone. If you're ready to start, do let me know.
to comply the T&C.
Great, thanks Justin. Okay, great. Asmira ready to go. Don't worry, Justin, your hair is nice.
Yeah, correct.
All good.
They say under LO. The remark is BU to comply T&C in LO.
Okay, let's go straight into it. Empower framework. In business lending, you would never use this. This is more common for consumer lending. Okay, this is more common for consumer lending. They will test you the definition for this in exam. Very straightforward. Okay, so it's character, ability, margin, purpose, amount, repayment, and insurance. Okay. So this is the alternative five Cs. It's more common for consumer individual loan agreement. Character, they said, is among the most important requisite for lenders. It may be difficult to measure precisely, but you want to determine in terms of attitude and responsibility. And ability, it depends on this. If they have their own business, how sustainable is their business? If they are an employee, then how stable is their job? And their income earning capacity is based on investments, business activities, and employment here. And low repayment prospect could be due to these following factors. This is very, very straightforward. In case you're wondering what is stigma, for example, okay, example of stigma. Okay, just give you an idea. Example of stigma. Do you want to hire someone with criminal record?
No.
Exactly. You just demonstrate a stigma. To keep it simple. What do they call it in Bahasa? Someone that steals things. They call it what? Panjang.
Angan.
Panjang tangan.
Actually happened in my bank. A story many years ago. You know how like in bank offices, a lot of people leave the cabinets unlocked. So during lunch hour, so a few of my colleagues, they left their purse and their wallets inside the individual cabinets at the desk. They go for lunch, come back, money gone. They checked the CCTV, and they found out it was the cleaner. They saw the cleaner put the hand in because the cleaner was observing who was leaving their handbags inside the cabinets. So yeah, my big boss was not happy at all. Like big headache. Here, in terms of margin loan advance, that relates to percentage of financing lenders is willing to extend to borrower. And lenders seldom grant 100% financing because the loan applicant must show commitment and minimum capacity to take risks. So generally, granting a low amount is more appropriate due to the increased commitment. So they need to invest more and reduce the risk. So high risk borrowers, we typically offer lower margin of financing. And the agreed margin of advance is dependent on these four credit issues: the borrower's capital contribution to partly finance the asset, the borrower's financial position, the overall financial position, the collateral quality, and potential repayment capacity. And in principle, the loan requested should be for a good cause. It should be a productive loan rather than a speculative one. And in the speculative loan, there's little or no income generation, and low repayment is uncertain. So in consumer lending, for example, I purchase a land thinking I hope the land will appreciate in value, but it's not generating any income. The way you can mitigate it sometimes for consumer lending is you mitigate it with they have their own cash flow from their income generating capacity, maybe their own business, for example, to pay off. So you're not depending on the cash flow from the asset. The amount of valuation is based on borrower's needs, capacity. We learn in principle a proportionate stake for retail. We look at write down LTV. What does LTV stand for? Try to remember. LTV stands for what? Not Louis Vuitton, huh?
Loan to value.
Loan to value, sure, yeah, well done. Yeah. Because this one is a consumer. Sorry, look at LTV. It is possible to request loan amount greater than borrow requirements as long as they have adequate security. And here for the repayment, we check based on the needs of the borrower, the income earning ability, and the lender's requirement in terms of loan safety and reduction of risks. And then this is the repayment evaluation here in terms of the typical repayment structure. Last point here, adequate as insurance protection is requirement for asset-based financing. If I'm talking about asset-based financing, am I talking about life or am I talking about general? More likely, I'm talking about what? General, yeah? So, example would be what? Fire insurance, accidental insurance, or theft or burglary, okay? I believe in higher purchase law, they call it comprehensive insurance for motor insurance. Because that's the asset is often the lender's security. It's important to support the loan. Also important providing credit protection. An evaluation of adequate insurance is appropriate insurance risk cover as to the types of risk, appropriate coverage amount, insurance company reputation, confirmation of insurance premium payments, and annual renewal. Now here will be the borrowers and the legal status here. Now why we recap, just to recap why we look at different types of different borrowers legally from a legal point of view is because different types of loan applicants may have different legal status. And because they have different legal status, they have different risk impact and documentation requirements. So there's also a variation of legal risk in loan recovery. So these are the different types of borrowers that we're going to cover. And for individuals, the legal capacity is 18 and above, but note, for credit card is special. It's 21 years and above, and must meet B&M responsible financing. Mentally disabled handicap can open account subject to joint account holder. Take note, adjudicated bankrupt are not allowed to open account in Malaysia. Contract and borrowings by minor are not allowed unless it's on necessities. So people always ask me, hey, how come we lend to consumer, we lend to sole prop? It seems the same, right? I said, no. The key difference is in the sole prop, you're lending to someone that has a business license. And they have to register at ROB. So here will be sole prop and partnerships, they'll have to register here. If I'm talking about Senior Berhad, I'll go here. ROC, Register of Companies. It's now merged under CCM since like past 22, 23 years. So CCM administers provisions for Companies Act and registration of business. So even the sole prop, that's the key distinction for consumer. Sole prop has a business license. And then these are the business registration points here. These are all your options you can register as a business. So all businesses must register. They have what they call a notice of registration. That's your evidence. If you want to be incorporated, this one applies for Senior Berhad and Berhad. Then you go for certificate of incorporation. For sole prop, single owner, they can be under own name or business name. If the loan is given under business name, the individual owner is responsible for the outstanding amount. And under Malaysian law, there's no legal distinction between business and owner. Okay, all SOP must carry the name without any indication of limited liability. And there's unlimited liability here, so you can write down no limit on business liability. We call it unlimited liability. All SOP POPs must have a certificate of registration business, and they must renew it. And they have what they call a renewal certificate. If they don't renew, it is technically an illegal business, so that's not good. And here are the considerations for business loan to SOPOP. We assume full responsibility of business liabilities. So all personal assets are more at risk. There's no legal requirements for regular audits. So that's why financial information is risky. And SOPOP is fully responsible for all debts outstanding. There's no point getting guarantees from SOPOP because there's no value because they're already personally liable. You must get a guarantee from the party. This slide you can mark down as exam topic. They do ask what is the advantage and disadvantage of SOPOP. It's simple to form, inexpensive, quick operational setup. All profits go directly to owner. Management decisions are easy to make. No elaborate regulatory requirements such as audit and filing of accounts. Disadvantage is all losses solely borne by owner. They are personally responsible for unpaid debts to banks and suppliers. No advice or check and balance, limitation increasing capital, no succession plan, no ability to afford professional managers. And partnership, I talked about it briefly yesterday. So the business is distinct from the partners, is 2 or more, maximum is 20 partners. But take note, there was an exam topic, they asked which is the exception to that rule. The exception to that rule is legal and professional firms. They have unlimited partners. And all partners are liable for total debt load of the partnership firm. And the partnership changes status each time a partner is admitted or retired. They have what they call all partnership is governed by Partnership Act here. So they mention here they have equal responsibility distribution profit and loss, regardless of roles and capital contribution. So they have what they call a partnership deed. Partnership deed provides partnership details including capital contribution, profit sharing, drawing of funds, and how are they given a mandate to act on behalf of partnership. If you have this, it prevails over the act. If you have no partnership agreement, you follow the Partnership Act. That's how it works for partnership. Exam topic will be here. What are the liabilities for outgoing and incoming partner? For incoming partner, they're only liable for debts incurred after admission as partner. So for existing partner debt, if they want to absorb the existing term loan, they have to get a letter of undertaking with the partner to accept liabilities, partnership existing debts, subject to present and certain conditions. And for revolving facilities, they'll have a new credit to accounts is to settle earlier debts. New debits is considered new loan, new partners will be liable. Try to think of new credit is money coming in. So this one here, you write down credit is cash in. That's an easy way to remember. It's to settle earlier debts. Debit is cash out. Yeah, just to keep it simple. Debit is cash out. Let me write that down. Out. Cash out. For outgoing partner, it is very common partnership to be moved for original agreement. Liabilities for outgoing partner is determined as of the date the partner dies, retires, or resigns, provided the lender is given notice. Outgoing partner is not liable for new debts incurred after the set date. So it's very easy to determine the amount of outgoing partner's liability for non-revolving facility. It's more difficult for revolving facility, such as overdraft incoming credits to repay earlier debts, but outgoing partner absolved from liability of any debts. For this reason, personal guarantees are taken out for partners to prevent the rule in Clayton case from operating. Okay? But it's redundant anyways, because they're already liable anyways. So it doesn't matter. So, advantage, more people, more capital. With the losses are shared, broader management expertise, and minimum regulatory requirements. Disadvantage here is not legally separate entity, profit losses are shared among partners, disputes may arise, and I've seen that before firsthand, and unlimited liability on all partners unless it's agreed otherwise. And here in partnership needs 7071, they like to test an exam. In Bahasa, they call it perkongsian liability terhad. If you do a CCM search and you see a company named PLT, you know right away it is LLP. So all LP business must be registered with LLP. Every partner is an agent LLP. For any commitment made, if authorized to do so by any partners. Now, technically, they are not required to do statutory audit of its financial accounts, but all financial accounts and statements must be prepared in compliance with accounting standards issued by MASB. This slide you mark down will be exam topic. They're going to test you what is the difference between LLP and partnership. Partnership is not separate from the owners, but LLP is a separate legal entity. That's why they have limited liability protection. And they have unlimited capacity to hold property under LLP name, but partnership is not allowed to be registered owner. This applies to sole prop as well. And LLP have what they call perpetual succession. And partnership must dissolve and reconstitute business. Mark this slide down, this one will be exam topic. Okay, just give me 1 second. Okay, I'm back. Now, let's go ahead and recap now. I think now is the perfect time to recap. Okay, we'll cover 5 C's and Campari, support, and partnerships. Let's go. Everyone's screens on, please. First question is, can you name me the 5 C's without looking at the slides?
Credit, collateral,
Character, collateral,
capital,
Capacity, conditions.
capital.
Good. Now, under business character, which one displays organizational discipline and trustworthiness?
Corporate governance.
Corporate governance is correct. Which is essential to stay competitive?
Conditions.
Expertise.
Expertise and
Continuous learning.
continuous learning. Go to slide number 35 in case you're lost, yeah? Go to slide 35.
Oh, okay.
Okay? Condition is patah hati answer. Okay? Alright. What do you need to anticipate trends and changes in the marketplace? Vision. One of my friends, 2 years ago, he was one of the first people to open a pickleball court. Before pickleball court was very popular. So he was one of the pioneers of building the pickleball court. Then he had the vision that people would play pickleball 2 years ago. He did the construction 2 years ago. Pickleball court was like popular, started becoming popular like last year. Now it's like everywhere. I'm sure Penang, Johor also got pickleball courts everywhere, right?
Yeah.
Even in East Coast, Kelantan, Terengganu, also is it crazy right now? I'm sure.
So far, no in Terengganu.
Oh, no, in Terengganu. That's interesting. Okay. Perak got a pickleball court everywhere. only Terengganu. Interesting. So, can potential market opportunity lah.
Yeah.
Interesting. Okay. But yeah, like Klang Valley is crazy. I think it's easily like 100 quads. Easily. It's crazy. Okay. Now, what are the 3 types of cycles in conditions?
Economics,
Economic,
Economic, industry,
country, product.
life cycle, product
okay.
life cycle.
In economic cycle, how many phases are there?
4.
4.
All faces.
Yeah, there are 4 phases. Very good. In industry life cycle, I taught you 4 letters. What are they?
MD.
GMD.
So this is how they'll test an exam. They'll go, which stage is overcrowded, large number competitors, profit margin, trade terms is competitive. What's the correct answer?
Maturity.
So I want you guys to mark down, that's how they'll test. They'll list out blah, 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 blah. You have to identify the correct one, the correct stage. So it's really, really textbook. A lot of people, when they saw that, they thought that was decline. Yeah. So in product life cycle, what are the 3 letters?
SSS.
SSS.
Sunrise.
Sunshine, sunset.
Astro satellite dish is which S?
Sunset.
Sunset.
Sunset. That's why Astro last year they had a VSS. A lot of people it's pretty bad. Like people are leaving Astro. That's how bad it is. Netflix.
Sunshine.
Sunshine.
They have established. They have a proven track record. Very established demand. Okay. All right. Next. In capital, do lenders take business risk?
No.
No.
Only take credit
Lenders
risk.
take credit risk, right? So who takes
Credit risk.
the borrower? How do the borrower underwrite the business risk? Capital. Yeah, they provide sufficient capital. And the way they measure it is shareholder financial commitment. Okay? So how do they measure, what are the 3 examples of shareholder financial commitment?
Shareholder fund.
Shareholder funds,
Subordinate loan.
subordinate loan,
Third party collateral.
okay? And then you can write down, this is also under CCR3, it's a gearing ratio. You can write down, yeah? Under CCR3, under financial ratio, this is a gearing ratio they'll measure. Yeah, this will be a gearing ratio. So they'll mention this again when you are with Paul tomorrow. So the one I talk about capital is business. How do I measure consumers' capital on slide 44? How do I check consumers' capital?
Net worth, asset liability.
Good. Net worth. So everyone write down, yeah? To measure consumers' capital is net worth equals to assets minus liabilities. Collateral is the first way out, true or false?
No.
Second way out.
Second way out, very good. Okay, good. Can you tell me Compawi without looking at the slide?
Again?
Character,
margin, amount,
Amount, margin, yes.
insurance,
Purpose, insurance,
repayment.
repayment, and ability. Very good. Okay. So
Correct.
remember, yeah, 5 C's, 5 MCQs. Campari, 3 MCQs. Remember the total MCQ is 80. Score high, score 100%,
Corrected.
score 80, 90% on these MCQs, on those 5 C's and Campari. You do that, you have a good chance of passing. Remember, the total passing rate is only 60%. Okay? But you want to score high percentage here in case you face difficult chapters down the line. Okay? Next. I think, oh yeah, I don't need to explain. It's very, very straightforward. We'll go straight to individual is legal capacity for individual is how old, for which age?
18 years old.
Credit card is special, right?
Credit card 21.
21 years old. Okay. For sole prop, do they have limited or unlimited liability?
Unlimited.
Unlimited liability. Do they need to do audited financial statements?
No need.
Oh,
Can they be a guarantor?
no.
No point, because why is no point they are a guarantor?
They already liable to
Same
the
entity. Not a
They're
separate
already
entity.
personally liable. They already have unlimited liability. Are they a separate legal entity or same entity as the owner?
Same entity.
Good. Do they need to renew their business license?
Yes.
Okay, this one exam topic. 3 examples of advantages, 3 examples of disadvantages. Slide 64.
Go to form.
Go to form, yeah.
Profit go to right owner.
Management decisions are additional,
Management is easy to make, yeah.
not elaborate regulatory requirements such as audit and filing of accounts.
Yeah. Just to share with you, right? When you open a sole prop, just a few hundred ringgit, and you know the audit accounts is like there's no audited accounts. But when my training partner opened a Sdn Bhd, he told me like not only that it costs thousands to register, right? Every day when they have to pay the audited accounts, even though it's a simple business, minimum like 15,000 ringgit have to pay the accountant. Okay, so it's not cheap to have a Sdn Bhd. Okay, that's why you see people who are like doing simple business, it's not realistic for them to pay auditors like 15,000 a year. That's why they'll go to the sole prop or the partnership option. Partnership is maximum how many partners? Slide 65.
20.
Good. What's the exception to that rule?
Professional.
Legal and professional. Yeah. So you circle on slide 65 that sentence. Legal and professional firms may have unlimited partners. That one was the exam topic. Partnership is governed by Partnership Act. If I have a partnership deed, do I follow Partnership Act or Partnership Deed?
Follow deed.
Follow deed. If I do not have the deed, I follow the act. Yeah. I follow the act. Okay. Just take note, incoming partner, outgoing partner will be exam topic. What is the name for LLP? You look for 3 letters.
PLT.
You look for PLT. Okay. Do LLP have to have audited accounts?
No required.
No.
Yes or no?
Yes.
But do they need to follow accounting standards by MASB?
Yes.
Yeah.
Yes. Really, really like hybrid. Really hybrid. Okay. Now, exam question is, tell me the 4 differences between LLP and partnership.
LP, a legal entity by itself,
Yeah.
limited liability protection,
Mm-hmm.
unlimited capacity to hold property under the company's name.
Yep.
LP has 5 perpetual succession. Okay.
Okay. So Tazo, you can circle the one of partnership. Sole prop and partnership not allowed to be registered owner under national land code. This also applies to sole prop as well.
Okay.
Yeah, sole prop and partnership are not allowed to be owners of property as per national land code. Only the the individual names. Under Companies Act, you can start a company. You must start a company with minimum 2 members. True or false?
Oh,
False.
Yeah, it used to be true.
yes.
Those of you who've been working a long time, it used to be true. Yeah. But they changed to 1 because they want to make it easier for businesses to open a company. That's why they changed from 2 to 1. Is Senior Berhad company limited by shares or unlimited company?
Limited by
Limited
share.
by
By shares. Very good. Okay. What do we call unlimited company? Sendirian. That's it. They have unlimited liability. There's no limit. Okay. Let's go. Okay. We end the recap now. We now go to slide number 78. Yeah, because we covered a lot of the stuff already. We now go to slide number 78. Okay. Okay. For slide 78, it is showing that this rule only applies to Berhad. So write down substantial shareholder rule only applies to Berhad, not Senior Berhad. Yeah. Remember what I said yesterday. The rules for Senior Berhad are not the same as the rules for Berhad. When you are a Berhad, you have to follow what they call substantial shareholder rules. Okay. First thing I gotta teach you is voting shares. Voting shares means the shares that gives you the right to vote. If you have the majority of voting shares, you naturally have control of the company. And substantial shareholders is write down 5% and above. 5% and above. Of voting shares. Just to be clear, yeah? Voting shares. And to elaborate a bit further, do ordinary shares have voting rights?
Yes.
Ordinary shares have voting rights?
Yes.
Yes. How about preference shares?
No.
Yeah, no. So when I'm talking about voting shares, I'm talking about those type of shares that gives you the right to vote. Okay. So on slide 79, you'll submit what they call Form 49A. If it's listed in stock exchange, it's within 3 days. Any other case, within 5 days. And here, like I said, it applies to public company. Okay. So you write down here, this only applies to Berhad, just to make it easier for your reference. Berhad only. you must inform the relevant public company and you must notify CCM on this as well. There's penalties for this. If you did not comply with the disclosure, there's a fine, and upon conviction, it's 1,000 per day if you still didn't comply. If you lie about it or mislead, they're very serious. This is rules under Companies Act. So you write down 10Y 3M. Very, very serious. Before I talk in detail about director's liability, everyone screens on real quick. I want to explain the big picture first. Yeah, I want to screens on first. I want to explain the concept of director's liabilities first. As you know, with Senior Berhad and Berhad, we have limited liability for shareholders. Okay, in a shareholder's point of view, okay, we want to invest in these shares. Hopefully, we make a profit. Screens on, everyone, please. Screens on, everyone. I'm in explaining mode now. So, imagine you invest in Petronas shares. I know Petronas is not listed, but just bear with me, okay? Or maybe a better example would be Sime Darby. Okay, let's do Sime Darby. That's a better example. That's listed. And Sime Darby is sued for, I don't know, causing the haze. And then they're sued billions. Okay, my question to you is, can the people who are upset sue you, the shareholder?
No.
Because can they sue you because they say, without you buying shares, you are the one responsible for destroying the environment? The answer is no. Because if it's true, nobody buys shares. Nobody will invest. Yeah? If it is true, you can sue shareholders, nobody buys shares. Make sense? Because most of the shareholders are just like investors. They're not directly involved in the company. Okay, most of them. Directors are different. Directors, do they have control of company direction? Yes. Can they decide what can they do with the accounts and finances? Yes. So they are in a different position compared to shareholders. So I'm not talking about SME here. I'm not talking about SME where directors and shareholders are the same. I'm not talking about that. I'm talking about big companies where usually you want the directors and shareholders separated. So real life example was a director. I believe he was working in he was a director in a pharmaceutical company, Malaysia. He stole all the company secrets, how to make the medicine, how to make the drugs. He started his own company in India, make all the drugs in India. The company found out, they're suing him because they say the director breached the duties as a director. So that's what I'm just explaining to you guys, the big picture first about director's liability before I go into detail. One other thing, my dad told me, he said, JG, that when you sign off to be a company director, you cannot say, I don't know Companies Act. That's no way, because the way it works is when you are a director, you sign off with the responsibility, you know the rules in Companies Act. You know what are the rules of the company. How can you be a director and not know company rules? Okay, so this is all we're talking about here, all under Companies Act rules. And so shareholder and directors are in different position. So you can write down, yeah, shareholder have limited liability, director, no. Director do not have limited liability. They have what they call director's liability. Because why? It's to protect the shareholders. It's to protect the investors. That's why I want to capture the big picture first. I'm not talking about SME, yeah? SME, directors, shareholders the same. I'm talking big companies, yeah? You can have directors and shareholders separated. You could have 7 directors and 5,000 shareholders, different position. Okay, now that I've given you big picture, it's easier for me to explain the slide. So here in director's liability, they exercise the powers for proper purpose and good faith, shall exercise reasonable care, skill, and diligence, and who have made good business judgment. They deem to meet the requirements of duty of director in proper purpose, good faith, do not have material personal interest, and appropriate. So all this I'm highlighting are all the things that they must act in the best interest of the company. They exercise reasonable care, skill, and diligence. Proper good faith. They must keep the records of the financials properly. And they must disclose the financials to the CCM when they file the annual returns. Okay? So remember, the limited liability only applies to shareholders, not directors. In case of any disqualification proceedings, the contribution order is made against the director. And whenever they pay out dividends in any company, the director is responsible for what they call a solvency test. Then that relates to cash flow solvency and balance sheet solvency. So under solvency test, they have to ensure the company will be solvent immediately after dividend is paid. And director may be personally liable if they fail to meet these responsibilities. I mentioned earlier, conflict of interest or fraudulent trading. That was what the guy did for some pharmaceutical company. Stole all the secrets, boom, sued. Failing to comply with specific duties, false or misleading reports, or unable to pay debts. And this is the example of offense. Okay? This is all rules under Companies Act here. They can go to jail. It's not just a fine. They can go to jail for this. Okay? And these are the breaches. The breaches include improper use of company property, opportunities, information. Company may identify its director of legal action and judgment in its actions given in its favor, or where court action is discontinued. Company may, with approval of board of directors, have an insurance policy to cover directors' liabilities. Even for remuneration, that means their fees and benefits, they have to get approval. In public, it's an AGM. In private, it's board approval, unless the company constitution states otherwise. A company is not allowed to make a loan to a director. A company is not allowed to guarantee a director's loan. A company is not allowed to provide a security, use the company asset as a security. Try to think of it as preventing the directors from abusing their position. The only type of company that can do this is exempt private company definition. So under Companies Act, this is the definition. Private company where no beneficial interest is held by corporation, is not more than 20 members, none of whom is a corporation. Okay, now here I want to explain some terms for you guys. What is the difference between ordinary shares and preference shares? Ordinary shares convey absolute ownership with voting rights. Preference shares no voting rights, but given preferential treatment on dividends, and it's usually fixed. And what's it called? Proceeds from liquidation. And then you hear the term, they have what they call redeemable. What's redeemable means? What's redeemable? Example, you 5 years redeemable preference shares. You put in invest 5 million in 2020 and collect dividends, then receive back 5 million in 2025. That's what they mean by redeemable. You put in the 5 million, after 5 years, you get back the 5 million on top of the dividends that you collected. That's redeemable preference shares. Okay. I need a favor. One Asmida, can you take a picture of what I wrote on the chat, on the Zoom chat, and post it in the WhatsApp group, please? So at least there's some information you can remember. Thanks. So this one here are preference shares, and they have no voting rights, and usually they get a fixed dividends, but they don't get the rest of this, okay? But for ordinary shares, they usually have the hand and all this, okay? And for dividends, it can be negated, altered, or added by constitution. So preference shares is only redeemable, that means I get my money back, if shares are fully paid up, and redemption is out of profits, fresh issue shares, and new company capital. It's subject to all the directors making a solvency statement, the company lodging a copy of statement with the ROC. This one here, I call this the Facebook rule. You might be wondering, why did I call it the Facebook rule? There was a movie scene, if you watch, called The Social Network. You can watch reference the Social Network. Okay, so there's Mark. Who's the Facebook founder? Who's the Facebook founder? Who's the Facebook founder? Mr. Who?
Mark Zuckerberg.
Mark Zuckerberg. Do you know there was another guy from Brazil who was also the co-founder? Does anyone know his name? Everyone's like, who? Don't know. His name is Eduardo. Yeah, I forgot his full name now. Okay, but long. Sorry. Sorry. Wow, Anifa, you know, Eduardo Severin, yeah. So you know the story, Anifa, right? Eduardo Severin got screwed out of Mark Zuckerberg because at the time he had like 33% shares, and somehow Mark Zuckerberg and other shareholder tricked him to sign documents, and they pushed his shares all the way to below 1%. And that's why in the movie, Eduardo Severin went to Mark Zuckerberg and like chucked Mark Zuckerberg's laptop and say, I'm gonna sue you. Yeah, because he broke the rule of this distribution rights rule. This is a distribution rights rule. Anytime you issue new shares, you must offer to existing shareholders first, so they can maintain voting and distribution rights. That's why I call this the Facebook rule. And that's why Eduardo Severin sued Mark Zuckerberg. Mark Zuckerberg paid him off and settled out of court. So I call this the Facebook rule. You can check it out. Social Network Day. Pew! Check the Tap the laptop of Mark Zuckerberg. Pause the scene. Okay. I already mentioned no par value already. So there's no share premium account reserves. All you need to know for exam is this. For exam, who determines the NPV share price issuance in NPV environment? Who determines it? Directors. Mark this down. This one is exam topic. That's all you need to know for exam. If they give you this, easy point, take it. Next, for this one here, this one they won't test an exam, we can skip it. Slide 93, 94, we can skip. Now, let's go over here in terms of the corporate group structure. Okay, they're gonna test you some basic understanding here in terms of group structure. So we have over here in this slide, this one is what, slide number 97, yeah. Holding company is they own more than 50%. And I want you to circle this word majority. Majority for subsidiary is more than 50%. Write that down. Subsidiary, the parent owns more than 50% of share capital. Okay? Policies and operations are under influence and control. Associate will be exam topic. Where the ownership is between 20 to 50%. They do allow accounting for a share of profits and losses. The keyword is share of profits and losses. But they do not allow consolidation of revenue and profits. There's no consolidation doesn't apply for associate. Consolidation applies for subsidiary. Shareholding may allow board representation, but no major influence on policies and strategies. Here under cooperatives is governed by Cooperative Societies Act. They borrow from the bank and they use to fund the lenders' members. Now, clubs and societies are unincorporated bodies with no legal status, and societies must register with ROS. It's governed by the Societies Act. Clubs need not to be registered. And they mentioned the committee on the board can borrow on behalf of the clubs and societies. The bank cannot sue the clubs and societies, but can sue the office bearers. And the last point here will be government. Government here will be Ministry of Finance. And what they mentioned in the book was, if any loans taken, especially if there's a government guarantee, you must get the approval from Ministry of Finance. We call these type of loans for infrastructure and economic special purpose for the government, we call it sovereign borrowings in a peg to country risk rating. Okay. Everyone's screen's on, let's recap before we take our second break, yeah? Just a quick one. Substantial shareholder. Substantial shareholder is how many percent of voting shares?
More than 5%.
Okay, more than 5%. Can it be 5% exactly?
Yeah.
Can be 5% also. That's why Perry, I was reading the news, Perry, of Warren Buffett. He used to be a substantial shareholder of a China car company called BYD.
Yeah.
And then recently bought Warren Buffett company slowly got below 5%. So that's when he's like slowly, like that's how they know. Like, oh, okay, he's no longer a substantial shareholder. But he bought the shares like back in 2008, and then he cashed out now in 2025, before BYD got really big. Now he's like disposing the shares. Next, what's the name of the form you submit to become a substantial shareholder, or if you are no longer a substantial shareholder?
Form 29.
29 what?
A.
29A. Yeah. Okay. Oops. Sorry about that. Other than the public company, who else must I notify? Slide 80.
ECM.
Yeah. Does this apply to Senin Bahar?
No.
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 Only Berhad.
Senin Bahar. Yeah. Okay. Do directors have limited liability?
No.
No.
Unlimited.
There is liabilities, right? Okay, so we covered that already. On slide 87, can you make a loan or guarantee a director's loan or use company assets as collateral for directors' loan?
Cannot.
No.
No.
But which type of company is exempted?
No beneficiary interest.
That's
Private
company.
company.
What's the difference between preference shares and ordinary shares?
Ordinary share voting right.
Voting right.
Yep.
Preferential in treatment in dividend.
Yep.
Proceed of liquidation. Prioritize for preference share.
What is redeemable preference shares?
They'll be redeemed by cash after the certain set period.
Certain period.
That's right. Okay. So normally, we call it for investors, they don't want to permanently commit. They just want to test. So they'll jump in with preference shares first. Yeah, they'll come in with preference shares first. Okay. Before they want to commit whether they want to be ordinary shareholders. Okay. Next. Exam question on slide 92. In the NPV environment, who determines the share price? Is it A, the investors, or B, the directors?
Director.
Right. Remember that for exam, yeah? That was one. If they give you that, that's a charity question. Now on slide 97 and 98, yeah? To be a subsidiary, the parent must own minimum 51% of shares. True or false?
True.
Those of you who said true, minimum 51%, take your hand up and slap yourself. How dare you?
Below.
How dare you? It's not minimum 51%, it's a trick.
50% plus one share.
50% plus one share. Or you write down majority. Majority, or you write down 50% plus one. It's not minimum 51%, it's a trick. Okay? It's not 51%, that's a trick. Okay. Associate, how many percent?
20 to 50.
20 to 50. Okay, 20 to 50. Okay? Now, what's it called? Can a parent consolidate associate results?
No.
No.
Only share
What
of
are
profit.
they permitted to do?
Share of profit and loss.
Share of profit loss. For example, to test your understanding, the parent owns 40% of associate. The associate makes 1 million ringgit profit. How much profit can the parent recognize in its group results?
400.
400,000, right? Yeah, 40%. That's how they mean by a share of profits and losses. Slide 99. Are clubs and societies incorporated or unincorporated?
Unincorporated.
Do they have legal status?
No. No legal status.
They have no legal status. That's why you notice that they mentioned in the book, the clubs and societies cannot borrow under their name. What normally happens is, if they do need to borrow, the members borrow on societies. I repeat, they have no legal status. That's why they cannot borrow, and that's why the clubs and societies will get their members to borrow on behalf of them. Okay. By the way, personal story. I remember, like, I was eating dim sum in Pudu with my wife, and I remember that the dim sum, I saw a van, and the van the van was giving out free food to the elderly in Pudu. And my wife said, "Oh, that's a famous charity, blah 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 blah. They give away free food." And then you can see, like, they're grabbing their handphone with the sticks and then broadcasting on Facebook Live. You know, they're promoting their charity. And 3 months later, I was watching my wife on Facebook. She was like, say, "Hey, remember the charity that we saw? There's a big scandal." So this one member on Facebook went, "Oh, you know, the members, they're stealing money from our charity. I'm going to report to ROS. I'm going to report to ROS. I'm going to report to ROS." It dawned on me right away, that charity is registered as a society. ROS stands for Registrar of Societies. Usually charities will register under society status. Make sense? In case you're wondering, what example of society? Charities. Then last night I just asked my wife, "Hey, what happened to that charity?" My wife said, "No more Facebook posts. Very quiet. Because all the members, like, low profile already." Well, then something was wrong lah. Okay, that's it. We'll take our second break now, 10-minute break, and then I'll see you guys in 10 minutes.
Encik Dan, ini maknanya Encik Dan guna punya itu handphone kan, dia punya Android punya sistem punya version dia maybe tak update lagi ataupun dia tak boleh support Android 13 ke atas. So N-Bank dia akan cut off dia punya application maybe next month. Dia kena Android 13 ke atas baru boleh pakai. So kalau phone belum update lagi dia punya Android operating system kena upgrade kepada 13 ke atas lah. Ataupun itu handphone tak dapat update lagi, maybe dia kena tukar handphone yang boleh support Android 13 ke atas, dia baru boleh login lah untuk future.
Okay, guys, I'm back. If you're ready to start, do let me know. Good. Awesome. Let's go to slide number 101. Okay. Slide 101. Now we manage next section, credit information and its verification. Long story short, if you have incomplete and bad information, that will increase your credit risk. If you have fraudulent information, that will increase fraud risk. So if you have this, that's not good. If you have this goes up. This one is where they provide adequate disclosure, current update information, and make sure it's accurately reflected the ball in terms of key information. This slide here is what information you collect from consumers. And this slide here is what you collect from the business case. Now, in a way, why we verify credit information is we want to reduce information risk. So you want to make sure as an objective, you make sure the information is authentic. The loan application complies with regulatory requirements of bank lending policies, and we might need to get additional information that's useful in making credit decisions. And here, in terms of collecting information, okay, this one you mark down on slide 108, this one will be exam topic. And you might be wondering when you're looking at this box, how come they said verify with non-banking institution? There is an example. Example would be CCM. Need to notice for exam, blacklist system and the information system. Blacklist, they put prohibitions on the subject who have defaulted in the past. Example will be D-checks, traffic police list of offenders, Department insolvency list of bankrupts. It's always the latest current information. That means if there's something that means they're still in default. And there is some prohibition and limited rights until default has been cleared. Lead information system is based on past records. For example, secrets, RAM, and CTOS. It may not indicate the current latest status. You may need to do further investigation. The system does not remove rights or place prohibitions on the subject. Then they mentioned credit reference agencies. These are special organizations set up to assist financial markets and creditors in conducting credit checks on persons or organizations. So we have, for example, here for secrets, is managed by Bank Negara under the Credit Bureau. So credit bureau is responsible for collecting credit information, but note for exam, it doesn't collect information on depositors and investments. And CCRIS is only available to FIs, it's the lead information system. It gets the information from the credit bureau, and it automatically process credit data received from FIs, and it generates credit reports upon request. And here, credit information is collected by credit bureau. FIs in Malaysia submit to credit bureau here. Reference information for JPN and SSM. So these are two examples of non-banking institutions to verify information. Mark this slide down. This one will be exam topic. What are the 4 types of report? Summary credit exposure report, detailed individual credit report, motor vehicle report, and customer supplementary information report. These are the 4 reports available to FIs. D-checks gives information on dishonored checks by account holders and whether the current account is closed or checking account. Also managed by the same department that manages secrets, credit bureau. So this one here is blacklist. So BMC were established back in 88, but it's now taken over by the G-check system. So it used to be Bank Negara that decide whether to close or appeal, but now they leave it up to the individual banks to decide whether you want to close the account, whether you want to process the appeal. Bank Negara no longer process it anymore. Now, they mentioned in the book it was called RAM Credit Information, but as of recently they call it Expedient. So this is where you do the basis report. Okay, it is acquired and renamed under Expedient. And where they will test you in exam will be what are the 6 types of report that you need to know for exam. So it will be credit and intelligence report, company and business intelligence report, and company and business search reports, and bankruptcy and liquidation search reports, financial summary reports of business and companies, and business ratings report. And this one here will be CTOS. CTOS is information based on publication, advertisement, and search to deem reliable. It is merely providing historical information about customers, but it doesn't provide any subjective opinions. And CIS is managed by respective FIs, and this is for internal bank records. This one, they won't come up in exam, we can skip it. Now, here in terms of warning signs you need to check. Significant difference in information submitted, undisclosed creditors' liabilities, using same address for home and office unless it's a home office business, warning in the case of credit reports, credit history less than 12 months, information consistent with age of application. I'll give you a minute to have a read through here. There's a lot here, and I want you to give you guys a couple of minutes and then let me know if there's any that you want me to elaborate or you're not sure what it means. I'll give you guys a minute to read through this one. Now, is there any of the boxes you're not sure what it means? Do let me know. Otherwise, if you're okay, then if you want me to move on, then just let me know. Okay, so it's okay. How about the rest? Okay, straightforward. Okay, then I'll move on. Take note for business lending, qualified is no good. If you want it to be unqualified, changing your auditor is also a bad sign. So these are all warning signs. Changing in the arrangements in office and warehouse, significant number of litigations, and non-filing of latest statutory records at CCM. You want to obtain all of this relevant information here, check all of this information here, and insist direct and indirect sources, and communicate closely visits of places of work or residence. For retail financial information, this is the information that you typically collect, and you would check the individual's assets, verify the ownership, and check the individual's liabilities to determine the net worth. And this is the example of calculating net worth of an individual. Some retail borrowers may deliberately hide liabilities to raise the net worth, so they should declare all of it to be true and sign a declaration of disclosure. They make a representation. If they found falsified information, you have the right to terminate the loan facility. This one is exam topic. Circle this one here. This one is definitely exam topic. Under Companies Act, all limited companies must have their accounts audited by independent auditor. But they have what they call the practice directive. These type of companies are exempted. Any questions on this slide? Slide 132, yeah. Okay, Janice. Threshold qualified. Okay, they won't test you the definition in the exam, but for your knowledge, yeah, Janice. It means asset value 300. Asset is 300,000 ringgit below. Total number of employees, full-time employees, is 5 and below. So it's like such a small threshold that it's not worth having audited accounts. So that help answer your question there, Janice and Perry. Yeah, you don't need to know the definition for exam, but just for your knowledge, it's like they have a measurement like a number of full-time employees, the asset size, that's all. That's what they mean by threshold qualified. This one we won't explain because this is honestly too easy. They won't test you on this. Income tax will never come up in exam. Feasibility report means when you are financing large-scale projects. When I was working in syndication, we did the financing for examples, the Petronas petrochemicals plant in JB. We've done financing for highways in different countries like Australia, and we did the financing for Genting, when we financed their hotels and their casinos and their theme park in Singapore. So it's not the usual, oh, give me your 3 years financials and give me your who's the shareholders that. No, it is much more detailed information on feasibility reports. So if you look at the back of these slides, they gave the reference there. So the point is that you have to do a very detailed assessment, okay, because of the high risk element. Next one here on slide 140 for valuation report is a professional document issued by qualifier. It indicates value of asset for lending and disposal purpose. It provides guide to lenders in making judgment of adequacy and suitability of proposed security assets. And just to take note, it is under the Malaysian Valuation Standard, and they set the standards for valuing properties or collaterals under MVS 4. So generally, as a property valuation report, we check the basis, the method, the subject valuation, the report date because time is sensitive, and with the relevance of assumptions and the accuracy of asset description. What will come up in the exam, you mark down slide number 143 to 148 is all exam topic. So slide 143, exam topic, you write down the 7 valuation methods. Okay, now on slide number 144, this is the first one. They talk about cost approach. Cost approach is premised on this idea. We estimate the property value by totaling the land value plus what is the depreciated value of any improvement. So the value improvement is determined by RC and LD. Replacement cost new, less depreciation. So replacement cost, it refers to cost of replacing or improving a house, modern design, workmanship, and materials. It's considered the most reliable measure of asset value when used for new structures, but less reliable for older properties. It's very good for special use properties for valuation, for example, arenas and public assemblies. Public assemblies, for example, arenas and stadiums. Next one here for sales of capacity approach is based primarily on the principle of substitution. We assume the prudent individual will pay no more for property than it would cost to purchase a comparable substitute property. And a typical buyer will purchase property that meets the needs for the lowest cost. Discounted cash flow method. This is where it's used for large and expensive income producing properties. For example, office towers, for example, shopping malls. They will generate income from its parking, from its rental, and they will have income for X number of years. So what we do is we check the expected net income to be generated for all the periods until the end of the life of the property. We put the discount rate that represents the market rate of return for user, and we apply market supported yield or discount rates to project future cash flows to give an idea what is the present value indication. So multiple years of net operating income is valued using discounted cash flow analysis model. Income capitalization approach is used to value commercial investment properties and is intended to directly reflect model expectations and behavior of typical market participants. Generally considered the most applicable valuation technique for income producing properties where sufficient market data exists. Residual value method estimates residual value by gross property, gross income, less project costs. Okay. So if the extractions over time factor is considered by appropriate discount rate over the period of time. Capitalization or investment method, they have what they call NOI, using revenue multipliers or capitalization rate. For NOI, stabilized NOI will assume the building is leased at normal rate, leased to occupancy level. The NOI formula is gross potential income minus the vacancy factor and collection loss to equal net effective gross income minus operating expense, but includes debt service, income tax, and depreciation charge. Last one, I remember this came up in exam. Profit method is suitable for income generating property and draws on past track records of revenue and expenses. Here, in terms of credit documentation, is legal and non-legal documents to keep full records of borrowers and lenders. And this is where you diarize the information here and keep it safe. This is the typical information that you will collect for general lending purpose. Just take note in soon, yeah, since you're in retail. For business lending, they will take also the board resolution. So what it normally means in soon is the directors, they sign off, they're authorized to, on behalf of the company, to accept the letter offer. And they're authorized who are the approved signatories in the company to execute the legal documents. If borrower is an individual and absent, they will appoint a proxy as a donor and register the power of attorney here. This one will be exam topic. What is statutory declaration? It's not a legal document, it's not a credit support item. It's a legal procedure to secure truthful information on the borrower. Okay. What's the purpose? To extract statement of truth from person under oath. The intention behind obtaining SD is to deter applicant from making false statements or misrepresenting him or herself in any way. Can the lender rely entirely on SD? No, because there's still risk involved. Dishonest clients will still cheat to get the loan no matter what. And this is the penalty under penal code. And this is the exact question they asked. Under what circumstances is SD taken in banking practice? Remember the below. Below stands for bankrupt, important information, lost documents such as IC, title, sales and purchase agreement, and no other liabilities or ownership of a second home. And last point here, why you must stamp the documents. Stamping will allow it to be admitted as evidence in court. This is the penalty for both bank and borrower, and late stamping will incur penalties. That's the end of chapter 5, very straightforward. Okay, not too technical of a chapter, but let's go over, everyone's screens on please. Let's go over this quickly. Let's go to slide number 109, 110. Give me 3 examples of blacklist systems.
V-checks.
D-checks, very good.
Citos. Secrets.
Who said Citos Secrets? Patah hati. How dare you? Blacklist, not lead. Blacklist. D-checks.
Department of Insolvency.
Department of Insolvency and
List of
Traffic
bankrupt.
Police.
Traffic police.
List of offenders.
Yes.
Okay. Do not think like real life work. Yeah, you keep thinking. Citos Secrets is blacklist. Salah. For example, when you bounce the check 3 times in 12 months, are you allowed to open a current account?
No.
That is a prohibition. Okay. If you are bankrupt, can you just travel anywhere you like? Without DGI approval?
No.
No. You have to surrender the passport. So those are examples of prohibitions. Okay. Lead, you may have to check further. Yeah, lead, you may have to check further. Okay. Under secrets, the credit bureau can collect information on deposits and investments. True or false?
False.
Slide 112. Under secrets, credit bureau can collect information on depositors and investment. True or false?
False.
False.
False. Very good. Okay. Name me the 4 types of reports under secrets.
Summary credit exposure report.
Detailed individual report,
Detailed individual report.
motor vehicle,
Yeah.
customer supplementary information.
report.
Good. Now for expedient, name me the 6 reports under slide 119 and 120.
Credit and intelligence report.
Credit intelligence report, yes.
Company and business
Company and
intelligence report.
business intelligence report.
Yep.
Company and business search
Company
report.
and business search
Company
report.
business
Official bankruptcy and liquidation search report.
official bankruptcy liquidation search report.
Financial summary
Financial
reports.
summary
And
report.
Financial summary report.
Business
Yep.
and company.
business
Business
rating report.
rating report.
Business ratings report. Let's go to slide 132. What are the 3 types of companies exempted from audited accounts?
Zero revenue company.
Zero revenue.
So
Dormant company.
So qualified.
dormant company.
Government.
You can write down, how do you remember this? You can write down ZTD, I guess. Z for zero revenue, T for threshold qualified, D for dormant. If you find that's easier to remember. ZTD. Not too crazy. Yeah, it's just a valuation question. Okay, so slide 143 to 148. Which of the valuation methods for property uses RCNLD to value improvements?
Discounted
First approach.
cost
Cost
approach.
approach. Cost approach.
Cost approach.
Cost approach. Okay. Which property valuation method takes the market supported yield to project future cash flow to arrive at present value indication?
Discounted cash flow.
Discounted cash flow.
Discounted cash flow.
Discounted cash flow.
Is discounted cash flow for residential?
No.
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 It's for very expensive
Office tower.
Incoming producing
income
properties.
producing properties. For
Shopping malls.
example, in Klang, the One Ottawa Mall, okay, or in the major office towers, for example. Okay. So I remember, just to let you know, cost approach they like to test, discounted cash flow they like to test. Another one they like to test was this one. Which one is draws on past track record of revenues and
Sales
expenses?
comparison.
It's not sales comparison. It draws on past track records of revenues and expenses incurred for managing the property.
Or profit method.
Profit method, that's right, Liwen. Yeah. Sales comparison, Liwen, means like I compare the price of another buyer. So I remember those 3 were the popular ones they like to test. So profit method, cost approach, and discounted cash flow method. Those were the 3 popular ones. Okay. Okay, next. Slide 150, 149, slide 151, 152, okay. What is a statutory declaration?
PIILO.
Belum lagi. Before, below, look at, Tazu, look at slide 151 first.
Legal document.
It's not legal document, it's what? It's a legal
Procedure to
procedure.
secure trustful
Get what?
information.
Legal procedure to
Secure
secure
trustful information.
information.
truthful information. And what happens if you lie? Or what happens if you misrepresent in the statutory declaration? You'll be subject to what code?
Section 3.
Penal code.
Penal code.
Section 3.
Penal code.
Huh?
Penal
It's a
code.
criminal offense.
Criminal offense.
It's a criminal offense. Yeah, it's a criminal offense. So, what's the purpose? Is to extract the truth under oath.
Oath.
Under oath. Why do we get this? What's the intention in obtaining statutory declaration?
To prevent applicant from making false statement.
Yeah, to prevent or deter. Deter means to discourage. Yeah, in case you're wondering, we saw the word deter means to discourage. Yeah, deter means to discourage. But if Joe Low signs statutory declaration and borrow money from you, do you still want to give loan to Joe Low even though he signed statutory declaration?
Oh,
No. Because dishonest client will still cheat no matter what to get a loan. Okay? Now, Tazu, under what circumstances do we take statutory declaration in banking practice? Now B law comes in. What's B?
BLO.
Bankrupt.
Important information.
Important information. Loss.
No other liabilities or ownership.
No other liabilities or ownership of second
time.
Yeah. Okay? Below. Just remember that. For exam. I want to spend another 20-30 minutes to cover some extra topic. We are now, just to give you guys a heads up, we're going to start the beginning of the chapters of death. In the CCR textbook, this is chapters 9, 10, 11. So we're going to start chapter 9. This is where a lot of swalan come out. A lot of people in exam, they meninggal dunia. Really, really pengsan. So just now we covered in the morning, those are considered easy. Now it's going to get very, very tough. Yeah. There's a lot of legal words. A lot of technical things that you need to know. Okay. All right. So now we're going to start. We're going to start on slide 154. In your CCR textbook, this is chapter 9. This is starting the chapter of death. Loan agreement and securities. Okay. Where they will test in exam is they're gonna ask you, what is the exam topic? What is the role of solicitors? They're gonna ask you this. Okay. The way you could remember is try to think about ESR. Okay. Try to think about ESR. Okay. What does E stand for?
Execution.
So you see here, they witnessed the execution. What is S?
Stamping.
So they ensure valid stamping. What is R?
Registration.
They register with government officers. So you can see the solicitor's role, 3 things you know off the top of your head. ESR. Okay? Another way you can remember is they do searches. There's a bankruptcy search. There's the land search. Okay, so remember, yeah, solicitor's role. There's remember ESR?
Execution, stamping, register.
And then they do searches, yeah? They do searches. They do land search, bankruptcy search, and for companies, they do one more search, CCM search, for business loan. CCM search is more for the business loan. Okay. As well as the other content like drafting, verify, explain documents, that's very straightforward. But this one will come up in exam, slide number 156. Then we have loan agreement. Loan agreement by definition is a contractual and legal relationship between lender and borrower. So this agreement has to be drafted. and kept safe. And I want to ask you guys, when I write this here, which number is E out of 1, 2, 3, 4, 5? Which one is E? Which one is execution?
Number 2,
Number 2, correct. Which one is stamping?
3,
3. Number 4 is R.
register.
Okay, ESR. So you see why I teach you ESR? Because you're going to see it again and again and again and again. That's how you can remember it. And these are all the major sections of the loan agreement. One exam question they ask you is, what is the difference between condition precedent and condition for drawdown? This one obviously is before drawdown. They have the terms and conditions of the loan. They have the conditions precedent. So conditions precedent means it's conditions imposed by the bank to be fulfilled prior to making facilities available. These are the examples of CPs. Non-fulfillment of CPs prevents the loan to be made available for drawdown. Okay. Conditions for drawdown. Some loan facilities have specific conditions for each drawdown. It's designed for private lenders with some control over use of funds. It's very specific. Okay, so you can, this one you can write down is based on principles of control. You can write down here, principle of control. Remember we learned this morning, principle of control. Are we on the driver's seat or are we on the passenger seat?
Driver.
Driver seat.
Driver's seat.
Driver seat.
So you write down, yeah, we are on the driver's seat. And then these are the examples here. If I have trade finance facility, you must give me trade documents. If I see top matching, I will reject. No drawdown allowed. If I'm, for example, financing a furniture factory and I see they give me documents to buy Ferrari, I can reject. Because I have the driver's seat. I can control. Okay? So it's a specific to control, the principle of control. If I'm financing a contractor, they must give me certificate of work completion, only then I draw down for the construction project. If developer, I'm doing a bridging loan, they must give me evidence of sales. Without evidence of sales, how do I know they can repay the loan? So this is what they'll ask in exam. I'll write this down for you guys, yeah? So exam questions they'll ask is, what is the difference between CP and conditions for drawdown? And then they'll also ask you example of what is event of default. So event of default means after drawdown until loan maturity. If they breach the loan agreement, the bank has the right to say, I want my money back. I want to terminate the loan. Okay? Terminate the loan. So what is a covenant? Covenant in simple terms, you can write down is CCM. Covenant is CCM. Credit control mechanism. Credit control mechanism. There is positive covenant. Borrower must do. Negative covenant. Borrower not allowed to do. This is all stated in the loan agreement. And the way, and I will tell you, slide 163, slide 164, guarantee exam topic. Mesti ingat. Okay? Here. This on slide 163 is financial covenants. 164 is general covenants. This one guaranteed will come up in exam. They will test you. By hook or by crook, they will test you on this. So study that well, mind map it well. Okay? So long story short, if the ball complies with covenants, they declare all covenants have been complied with by the ball, or they can get the auditors involved. There was issued an audit statement. All loans and lending covenants have been observed for the period under review. Now, here is event of default. I mentioned earlier, there's the breach of terms and conditions. And if they cannot rectify the breach, you have the sufficient reason to terminate the loan and say, I want my money back. And these are the examples of event of default from an individual and business lending perspective. Cross default means any other loan, any other bank, if it defaults, you have the right to also call event of default. And the reason why you do that is you don't want to be in a position where, say, one loan catches fire and you cannot call event of default, and then they will sue and recover and you're left with nothing. So that's why you want to call. And the reason why you want to have cross default, protect the lenders from going weakness and reminder to borrower to maintain financial discipline at all times. That will be this one I want to cover after lunch, security. I want to cover loan agreement first. Okay, let's recap the last 5 minutes, yeah? Last 5 minutes, let's recap. Now, screens on everyone, please. Give me 5 examples of solicitor's role. 5 examples of solicitor's role.
ESR,
ESR, very good.
searches,
What are the searches they do?
bankruptcy,
CCM.
Now, regarding
Land search.
execution, are the solicitor executing or are they witness to the execution?
Witness.
They are the witness. And then you can write down, yeah, the reason why they witness is to prevent forgery. The reason why they witness is to prevent forgery, which we'll talk about later. Yeah. So witness, and stamping, and register. Okay, good. Next one. What's the difference between CP and conditions for drawdown?
Specific condition.
Which one is specific conditions, VJ?
Condition for drawdown.
Conditions for drawdown, where CP applies to all types of loans, right? Give me 3 examples of conditions for drawdown.
white box solution, director's solution.
Director's resolution for CP. I'm asking about conditions for drawdown, which is specific.
Or specific will be
Construction loan need
Control.
CCC.
Yeah, construction loan, you get the what? You get what certificate?
Certified
Of completion, CCC.
Certificate of work completion. Okay. How about developer?
Develop
Confirmation
of sales.
Evidence of sales. And then working capital,
Trade document.
Sales
Trade
invoice, trade
documentation.
document.
lady, for example, yeah. Trade documents. You know, when we do conditions for drawdown, are we in the driver's seat or are we on the passenger seat?
Driver seat.
Driver's seat. This is applying principle of control. We are on the driver's seat. Very good. Now, what is covenant? I taught you 3 letters. What is covenant?
CCR.
CCM. Credit
Control
Control
mechanism.
control mechanism. Is this applied for before drawdown or after drawdown?
After one.
After drawdown. Is covenant is for after drawdown until loan maturity. Those of you who have children, you also put covenants on your children. For example, you tell your children, you must sleep by certain time. You must finish homework by this time. You are not allowed to eat ice cream before dinner. Those are covenants. Because you're managing the behavior of your children, isn't it right?
Yeah.
So that's how you look at covenants. Covenants are treating managing the behavior of borrower. What are the 2 types of covenants I taught you?
Positive and negative.
Okay, what is positive covenant?
The thing borrower allowed to do.
Borrower must. You don't do, no money. Okay? Borrower must do. You don't do, no money. Okay, I pull the money out. Give me 5 examples of positive covenant. This one you have to look at slide 163, 164.
Thinking fund.
Working capital maintenance.
Working capital maintenance, minimum equity covenant, yes.
Working fund requirement.
Sinking fund, yes.
Borrowing restriction.
Payment.
Patah hati, who said borrower debt restriction? Saya nangis. How dare you? That's not a positive covenant. Remember, positive covenant, borrower must do. Borrowing and debt restriction is not allowed to do. Borrowing and debt restriction is a negative covenant. Go to slide 164, there's 2 more.
Valid access.
Valid business license and
Insurance coverage.
you must have a business license. You must have insurance. If you don't have, I terminate the loan. Make sense? Okay?
Yes.
Now, what is negative covenant? Borrower
Must not do.
Borrowing and debt restriction.
before that. Borrower not
Cannot do.
cannot do. Not allowed to do. That reminds me. Before I forget. Let's see. Payee. Could you help take a picture of what I wrote in the chat? So post it in the WhatsApp group, please. Payee. Is that okay? Thanks, yeah. So at least you remember this, yeah. Give me 5 examples of negative covenant.
Dividend payment restriction.
Dividend restriction, yes.
Borrowing and debt restriction.
Debt restriction, borrowing restriction, yes. Now we're gonna go to slide 164.
Non-disposal of key assets.
You are not allowed to dispose key assets. Good.
Restriction on change of business ownership.
Restriction of change of business ownership, absolutely.
Should investment.
What type of investment?
Outside
Normal business.
Core activity.
So they're trying to prevent the behavior where they go too naughty. They dispose key assets or they invest in industries they don't know. So that's where they get in trouble. Okay. What is event of default? On slide 166, what is event of default?
Breach loan agreement provision.
Loan agreement.
So if you breach the loan agreement, what is your right as a lender?
Call back the loan.
Call back the loan. I want my
Money.
back. I still remember when I was in syndication world, the German banker had a German voice. Nine, I want my money back. We're all like scared of the German banker. Whew, very fierce. Okay. Germans are very serious. Give me 5 examples of event of default. Can be business, can be individual. I don't care.
Delinquent payment.
Delinquency, yes.
Covenant default.
Covenant breach, very good. Cross
Job
default, very good.
Legal proceeding.
Legal proceedings, very good.
Job loss.
Job loss, that's for individual. So, if possible, right, you can terminate the loan
等一下先，我在上课
even。though the borrower paid the loan on time. For example, they breached the covenants, or they don't have a business license, or cross default. You can terminate the loan for those reasons. Okay, it's to protect you. Yeah, you manage the behavior. Okay, it's to manage the behavior. Last question: what is cross default? What is cross default?
Loan default has occurred. But
Loan default occurs due to other loan default.
Yeah. You can write this down to keep it simple. Cross default is any other loan, any other bank. If they default, you have the right to call EOD. Remember, EOD is event of default.
Event of default.
Yeah. If they default and you cannot call, they will sue and get the money first. You're left with nothing. You want to have the right to call event of default and sue at the same time and say, I want my money back. So you have a better chance of recovery. The reason why they call it cross, think of cross like an X. Yeah, you're going across the other banks. That's why they call it cross default. Yeah, you go across. That's why they call it cross default. Go across. Yeah. Okay. Good. We will start as 169 at 2 p.m. Yeah. Good job, guys. I'll give you guys enough time. I'm not gonna lie. In the afternoon, it's all the Meninggal Dunia slides. Yeah. It's all difficult slides. So get a good lunch, get a good rest, and then I'll see you guys at 2 p.m. 2 to 5. Yeah. But it's gonna get harder. Just to let you know. Okay. So be prepared. I'll see you guys at 2 p.m. Good job, everyone. I'll see you guys at 2.